Our guests today are two of my favorite people. We have Bob Lamm, who's a partner and chair of the governance and securities practice for Gunster down in Florida. He's been in-house at 6 companies, so he's been around the block. And then we have Stacey Geer, who's been in-house at 3 different companies. And right now she's Executive VP, Chief Governance Officer, and Deputy General Counsel, and Corporate Secretary at Primerica. I'm Brock Romanek, today on Zippy Point. So Stacey and Bob, auditor, audit committee interactions. It's always a hot topic, and it's something actually, there's panels about this and that rulemaking, but actually putting it all together, how does the audit committee work with the independent auditor? So Bob, who from the independent auditor typically attends an audit committee meeting, who besides the lead partner from the auditor?
I think that depends upon a whole bunch of factors. Most often, it's the engagement partner and the senior manager working on the matter, but that can change depending upon the circumstances. Sometimes it's a concurring partner if he or she happens to be in town. Again, the world of COVID with Zoom meetings, I guess they're always in town theoretically. Obviously, if the engagement partner is going off the client, rotating off the client, they bring in the new person. Generally, no more than 2 people. I think it would be a very rare situation for more than 2 people to show up at an audit committee.
We have had that rare situation where there were lots of auditor people in our meeting. Once a year, we have the Canadian partner present because we have a significant Canadian operation. Mm-hmm. And in this case, if the Canadian partner is going to come in, then usually KPMG calls it the client relationship partner, but I think they're kind of the concurring partner, then they might also be present. And so, and if they're going to be in the meeting, they start to adopt a more the merrier kind of approach. So we have had a few meetings with more than 2, but Bob's right. The engagement partner and the senior manager are the 2 that are always there and typically have the most major, speaking roles.
And are there any audit committee meetings, Stacey, where the independent auditors don't make an appearance at all?
So I was thinking about that. We invite them to every audit committee meeting, and we generally have 2 per quarter, the in-person quarterly meeting and the meeting before we release the, earnings release for file the Q or the K. And they participate in both of those meetings. If there was a special meeting for a specific topic, they might not be in attendance. Actually, one comes to mind. Sometimes the internal auditor might meet with the audit committee before finalizing the audit plan for the next year. And I want to say that the audit firm isn't always in that meeting, but it's a very specific, very, single subject meeting. Otherwise, we can pretty much count on them, being present.
Yeah, I think the only time in my experience that the auditor hasn't been present is when there's an audit committee investigation going on, mm-hmm. Which doesn't mean they won't be there. It's just that for certain purposes, you want to maintain privilege or work product protection. You won't invite the auditor in, maybe at the end of the meeting just to go over some stuff, but that's the rare exception, I think.
Right. Well, I think that's a good point. I mean, they don't participate in the executive sessions with various members of management.
Right.
And if there ever is something that's privileged, then we would, hold that to the end to an executive session or just ask them to, to leave for that portion of the meeting.
Yeah.
And Bob, how often do audit committees meet in executive session with the audit committee?
Yeah, my experience may be weird, although I don't think so. I cannot recall a single audit committee meeting of any of the gazillion companies I've worked for where there wasn't an executive session with the auditors. And I mean, as Stacey alluded to, there are separate executive sessions, or there have been separate executive sessions for each group. There's an internal audit executive session where nobody other than the internal audit team is there, a management executive session, sometimes a separate executive session for the GC, but always an executive session with the auditors. And again, the only exception to that would be the sort of routine meetings where you're just looking over the earnings release or pre-filing the Q. But for a full-blown audit committee meeting, I can't recall a situation where, in my experience at least, where there hasn't been an executive session with the auditors.
Yeah, I think that's the same for us. If there's a quarterly meeting to review earnings and there's no significant topics,
yeah,
and time is running short, they might waive the executive session, but it's always planned in advance. And then, if no one needs to have it, it might get dispensed with.
And Stacey, is there any best way to structure the audit committee meeting to have the best flow? When would you have the auditor
I don't know
show
that
up?
there's a best way. If there is, I want someone to tell me what it is. I'm not sure there's a best way to handle it. What we typically do is all the kind of the management matters are covered first. You know, the controller's report, the internal audit report, the risk report, and then the auditor does their report. And we do that because if there's anything significant, we want management to have presented on it first, because the auditor will present things through their eyes that are really management issues. And so we want to present those first. And then at the end of the meeting, we'll do any one-offs, you know, audit committee charter, self-assessment kind of stuff might be at the end of the meeting. But I think the key aspect for us is that the regular management reports on accounting or auditing or fraud matters come before we give the floor to the outside auditor.
Bob, can you talk for a minute about the PCAOB's auditing standard number 16 and this whole notion of the auditors must communicate with an audit committee before they issue their audit report?
Yeah, well, it's interesting because one experience that I may have told you about before, Brock, I had one of the companies I worked for, we had an audit committee member who typically slept through most of the meeting, but he would always wake up in time to say, what are these required communications? And one time he made the KPMG engagement partner literally read the required communications aloud. It's the stuff of which more sleep is made. You know, PCAOB Auditing Standard 16 covers, you know, a whole slew of things. It's like 8 pages or so. You know, it's everything from the audit plan to, I guess now, you know, CAMs are included in that discussion. What are you going to say? What is the auditor going to say with respect to CAMs? And it usually takes up several pages in the audit committee materials that are sent out as a pre-read. So even though they are required communications, they are not orally, except in this one odd case, they're not orally reported to the committee, and the committee's presumed to have read them and ask questions about them if they have any. For better or worse, it's kind of become very rote and very perfunctory. I'd like to think that if there were any required communications that were the subject of difficulty, controversy pushback from the auditor or the management team, that would be aired in front of the committee, not necessarily in the form of a required communication, but maybe the executive session or otherwise. I don't know if that's exactly what you were looking for, but I can go through the long laundry list of all the stuff that's covered by Auditing Standard 16, but instead, you know, put a link to it and let people read it. It's not exactly exciting.
In our case, the outside auditor doesn't actually read them all, but they also don't just rely on the pre-reads. I mean, they kind of go through every page at a high level, which can take a little while and be a little bit painful, but that's the practice that.
Yeah, that's interesting. That's interesting. Maybe that's your auditors or KPMG. Maybe that's just their style.
My auditors are KPMG, and that might be their style.
That might be their style. That may also be a reflection of the size of the company. You know, my last in-house position was at Pfizer. I can't imagine that, you know, going through those required communications would have generated a lot of impatience on the part of the audit committee members because there's so much to tell.
So beyond that, Stacey, what topics tend to get discussed the most? I mean, there's always the hot topics of the day, but what are the bread and butter topics that can?
Yeah, so, you know, changes to accounting rules get a lot of attention. When are they being adopted? How will they impact us? What's the timeline? What's the disclosure? And PCAOB developments. Those are probably the 2 areas that get the most discussion, other than, you know, something like an internal weakness or a significant deficiency, a material weakness, which, you know, knock on wood, we haven't had, so we haven't had to go through that. In addition, we've had a lot of discussions in the past couple of years. Again, it's KPMG who's had some of their own internal control issues. So we've had a lot of conversations with them about their issues and how they were remediating them. We've had, you know, the head of their audit function come to our meeting a couple of times. And so that's taken up a lot of time to, you know, it was to get our audit committee comfortable that they were doing what they needed to do to get through their own, you know, issues and to get a better result on some of their PCAOB inspections. And
then Bob, what about the matters that relate to the independent auditor, but you don't want them in the room, the audit fees, the annual engagement, how are those discussed?
You know, I was thinking about this in advance, obviously. I thought about it all in advance. I think this is actually one area where I've seen a fairly great level of change over the years. There used to be the sort of joshing about why are our audit fees so high, and that was usually done in the presence of the auditor, and then the negotiations for the fee would take place offline. Some of it still takes place offline, but I just don't hear the snarky comments about why are your fees so high anymore. I think companies have understood that, they want to have a robust audit. It's in their best interest to have a robust audit. So I just haven't heard that much complaining about fees anymore. But I do think that the actual negotiations, and again, it may depend upon the company, tend to happen between the chair of the audit committee and the engagement partner, offline, privately. If the Stacey's and the Bobs of this world are lucky, they will have an opportunity to review the engagement letter just to make sure that there's nothing in there that we wouldn't be happy with after the fact. Doesn't always happen. But I think it's become a much more sort of formalized process, and one that's accepted by the committee a lot more than it used to be.
Yeah, just quickly on the engagement letter, it's funny that you mentioned that because I always review it, but people do not like it if I have any comments whatsoever, because it requires a whole thing on the side of the auditors. Because, obviously the people we're dealing with in our company on the audit side, those folks at KPMG don't have the authority to change the letter. And so if there's any comments that we insist on making, it has to kind of go up the chain at the auditor, and it makes all the auditor people unhappy. So I tend to get pushback when I make comments. The other thing I've noticed is that the letters change from year to year, but when they first give it to us, it's never black lined. So I always say, can I have a black line to last year's? And they look at me like I'm crazy. But there is a little bit of a dance that I think kind of goes on.
Yeah, and you're absolutely right. You also get a hard copy. You don't even have a soft copy that you can compare yourself against last year's. So that is part of the dance. That's a good way to describe it.
I will say that I talked to a couple dozen of my corporate secretary friends I made a series of videos about governance topics, and one of them, which is how to run a audit committee meeting smoothly. A link to that particular vid guide is beneath this one. And almost every corporate secretary I talked to did complain about their audit fees. So
maybe the secretary will. Maybe because they're all coming out of the same overall budget. I don't know, but and maybe it's just idiosyncratic on the part of the audit committee meetings that I've attended lately. I just don't see the same level of grousing. I mean, maybe once a company has a material weakness, the audit committee is a little more reluctant to put the auditor on the spot. If we can fix this problem, I'm happy to pay you more. I don't know whether it's typical or not, but that's just what I've seen.
So Stacey, let's wrap up with audit committee minutes. How much detail typically about cover the discussions with the auditors?
I mean, my style of minutes is to not have that much detail for any of this kind of standard reports. I'll say that they reported. If there's required communications, I might hit what those topics were. I'll generally say that they, reviewed the presentation that was included in the meeting materials. And then, I'll cover anything in specific that is, relevant to that meeting or special or unique, but I'm not going into detail about what the auditor reported.
Yeah, and my approach, it's funny because I tend to like more robust minutes. I hate the word robust, but I can't think of another word on short notice. But for the audit committee, I think it is pretty limited. I mean, as Stacey said, if there's a topic that takes up a lot of the conversation, you probably want to mention that it was discussed. What are you going to say? Well, we reviewed the income statement, we reviewed the balance sheet, we reviewed the statement of cash flows, whatever. There's usually not that much detail. Obviously, if there's a particularly sensitive matter that you want to demonstrate was properly discussed by the board, or the audit committee rather, you're going to mention that, but not go into detail.
I agree.
It's funny you say you don't like the word robust, because I have certain words that I don't like too. One of mine is food. It's like, what, food? It's such a weird word. What's wrong with robust?
Because I've just seen so many minutes where a robust discussion ensued. It's like, yeah, come on, you can do better than that.
It'd be funny if it said the opposite of that, of course,
Right. I never met
the audit committee talked a lot.
Right.
Yeah, we all fell asleep. Well, thank you very much.
Thanks, Brock.
Our pleasure. Thanks, Brock. Take care. Good to see you, Stacey.